Day trading for beginners. This is going to be the topic for today because we are going to be covering everything you need to know about day trading and forex trading, especially the aspect of analyzing the charts professionally. Now, the strategy, if you don't know me, the strategy that I use, which is one of the best forex trading strategy on the trading space, is the set and forget strategy by FXAlexG. If you don't know him, he's one of the biggest forex trader in the industry, and that's exactly what I'm going to be teaching you guys, everything about that strategy. Now, disclaimer, this video is going to be very long and it's going to be boring, and I made that so on purpose just because I believe not everybody is going to watch the video to the end. People are paying thousands of dollars to learn what I'm about to teach you here for free. The best you can do is to subscribe, and it actually took me a lot of time to compile this video for you to watch for free, to learn, and so that we'll grow together, so that we'll set you up for success. Before further ado, let me show you exactly everything you need to know about how to analyze the chart properly, and I'm showing the best forex trading strategy for you to use to become profitable eventually. Now, so let's get into it. All right. Now, like I said, this video is going to be quite long. I would like you guys to stick with me here. So we're going to be covering this in this video, right? So the first topic is going to be chart hygiene. You need your charts to be clean and the indicators that we use as set and forget traders. Second, we are going to be analyzing or understanding what market structure is. Thirdly, we are going to be understanding what exactly this two time frame in sync is, because if you have heard him talking about two time frame in sync, you really need to understand what it means, because it's not what you think it means. Fourth topic is how to properly draw area of interest. How to properly draw this area of interest will determine whether you are going to take a trade or not. It's very important, and I would like you guys to pay attention to this particular one and psychology. Anyway, number 5, major confluences to look out for when you are taking a trade. When you have drawn your area of interest and have done all these things perfectly, you look for confluences that will make you put your money behind a trade. It's very important because your money is involved in this part. The 6th, how to place your stop loss and your take profit. 7, ranking your trades. You need to know which trade is good for ranking. You need to know which one is A plus setup, B setup, C setup, all those good stuff, right? 8, you need to know how to calculate your loss size. You need to know which loss size to be using, how much percentage you are risking, and all those good stuff. And 9, psychology. Now I'm going to tell you something about this psychology because I'm sure that you have heard this multiple times, right? Psychology, I've watched billions. All right, let's not exaggerate here. I've watched thousands of videos about psychology. I'm telling you right now, you want to pay attention to this psychological part, because I've summarized all those videos, all those multiple videos I've been watching over the years about psychology, and I've analyzed it into one concept that is very, very substantial and crucial for you to be able to understand the market. If you can just master this part of psychology, I'm telling you, you have mastered your psychology. Ladies and gentlemen, let's get into the video. Now, the first topic, like I said, chart hygiene. The first thing you need is for your chart to be as clean as this. Now, how to do your chart hygiene right now? You go over to settings right here. Now, your canvas, go over to canvas, put it as solid color. Solid color, change it to white. Right? Change it to white. You don't need black background. Trading is hard enough. You don't need to be putting things at the background to try and confuse you. You need your chart to be as clean as simple. You need to keep it as simple as possible. Trading is hard enough. You don't need to complicate things for yourself. Screenshot all my settings. This is how your chart should be looking. Screenshot all my settings. Screenshot all my settings. And that's pretty much it. You don't need the Euro USD at the background of your screen. You don't need to be reminded the kind of pair you're trading. You can see it right up here, right? You don't need a black background. You don't need all those lines and all those things, right? Now, for your candlesticks, now I'll tell you why it's important to actually change your candlesticks to blue and red. All of us in Stand Forget, we actually use this color, and there's a reason for that. So your candlesticks, I have to dive into indicators to be able to show you this, right? But your candlestick has to be blue and red, just because if you're trading and you are no longer seeing the color of the candlesticks based on this color of candlesticks. If you are no longer seeing the color of candlesticks, it means you have gone way too far. You need to be able to see the color of the candlestick to know that you're actually analyzing current markets. So that you know that you're actually analyzing relevant points in the market, right? You don't need to analyze all the way far back in 1980s, right? The closer the price action, the more relevant that price action actually is, right? So these right here are the indicators we use. We use the moving average. Now, if you don't know how to look for indicators, you just come over here to indicators and search EMA, right? Once you get your EMA, it will be something like this, right? Once you look for your EMA, you come over to settings right here, like this, right? And turn this figure length to 50. I'm using the 55 because I've just been so used to 55 for so long. There's no need to change it. Plus 55 and 50 is basically the same thing. I've basically not seen any changes in the market. But if you're using what FXAlexG is using the 50 ME. So turn this length to 50 and click OK. That's the first indicators we'll be using. And the second indicator is this no gap candle. Now, one thing about this trading is that candlesticks, right? Candlesticks have gaps. If you look right here, you see that there's a gap. You see that there's a gap right here too as well. We don't need all those things. Ladies and gentlemen, we don't need all those gaps. We need to see what price action has actually done. In this gap right here, price have actually gone all the way down. But why are we not seeing it? Because there's gap in the candle. We don't need all those gaps. You need to see the actual price action. Remember, trading is hard enough. You don't need to complicate things for yourself or expecting that price will come back and fill all those gaps. You don't need all those things. Just cover the gaps. So that's why we're using this no gap candle. Now, the settings for this no gap candle, right? You have to turn your chart to line chart. Remember, you have to select the line chart here, right? Then in the settings of the line chart, you turn it to invisible, just turn it to white. It will be at the background, it will be there. If you click on the line, you will see it, right? If you click on the line, I can't do that now. I wish to have shown you, but you see the line on the chart when you turn it to line chart. You click on the line, then you turn it to white or turn it to invisible, right? Then you now put this no gap candle. You search it in your indicators, look for no gap candles. Then once you bring it to your chart, you'll be seeing it as your normal candlestick colors, right? Then you click on settings, go to style, turn this one to blue, turn this one to red, then turn the wicks to black, turn the borders to black. And once you are done that, your chart should be looking just like this, apart from this area of interest though. Your chart should be looking just like this. So, second, you need to know what the time frames are. All these time frames, there are multiple time frames. Select these particular time frames: weekly, daily, 4-hour. You can select 2-hour, 1 hour, and 15 and 30 minutes. Look at it, 30 minutes and 15 minutes. Add them to your favorites is very important, because those are the time frames that we always use as set of forget traders. Every other time frame outside, not really relevant. These are the time frame we use: weekly, daily, 4-hour, 1 hour, 30 minutes, and 15. Now, third, your pairs. As set and forget traders, we can analyze any chart with set and forget strategy. But this particular pairs, if you want your pairs to be the same as FXAlexG pairs, you need these pairs: AUD card, AUD JPY, NZD card, Euro GPP, AUD CHF, Euro USD, USD JPY, card JPY, GBP USD, AUD, Euro AUD, USD card, GBP JPY, GBP card, GBP CHF or GBP CHF, GBP NZD, GBP AUD, GBP Euro NZD, Euro JPY, NZD USD, and NZD JPY. Now these are the pairs on his watch list too as well. You can add anyone you want, but I'm telling you right now, there's no need to add multiple pairs. These pairs can make you quite a lot of money, and I think that is that for chart hygiene, right? Then these are the major tools you need. You just go over here, look for all these tools right here: the rectangle, the line, the horizontal line, short position, long position, path, horizontal ray, fib retracements, head and shoulders pattern, text, and eclipse, right? These are the tools I use most of the time, and these are the tools you're going to be using. Now for the box, just change the color to this color. You can use any color, it's not mandatory, right? But this color is just safe on the eye. You don't need too much art on your work. You don't need too much drawings on your charts to be able to make money from this market, right? In fact, the cleaner, and depending on how clean your chart is, the more money you even happen to make for some strange reason, right? So we are done with topic number 1, which is chart hygiene and indicators. I've explained how these indicators work. I've explained the time frames you need to use, the pairs, and the tools you're supposed to be using. Now, 2, you need to understand market structure. Now you need to pay attention to this part. It's very, very important, because market structure, if you don't know how to read market structure, every other thing you're going to be learning after now is absolutely going to be useless to you. You need to know how to read market structure, and I'll show you in a very easy way so that you can analyze the chart properly. Now, this is just basic textbook information, right? If a market is trending upward, it's clear that it's making higher highs and higher lows. Are you with me? Now, this is the higher high at the time, right? If that is the higher high and this is the higher low, this is just basic market information, right? It doesn't matter which book you have read. Every book about trading tells you about these higher highs and higher lows. We didn't have to make this up by copying FXAlexG. It's just there, right? Once price has broken above the previous high, above the new high, this becomes the highest high, which is the same thing as the higher high, right? This is now the highest high, which is the higher high. And now this higher high cannot be a higher high without having a higher low. So we need to, as we have moved this one to the highest high, we need to look for a higher low for that. As soon as we see a curve, that right there, ladies and gentlemen, is the higher low. Basic information, right? Now, as soon as we close above again, that becomes the higher high. And you cannot have a higher high without a higher low, so you need to look for a higher low. And as soon as you see a curve right there, that right there, ladies and gentlemen, is the higher low. This is basic market structure, and that's what we use. Same thing for a bearish market. You have lower lows and lower highs. That is the same thing. If this is the lowest low or lower low, right, this is now the lower high. Once price breaks below, this becomes what? The new lower low, and this becomes the new lower high. Because once you trace, you see a curve, that right there is the next lower high. As soon as we close below this line again, as you can see, as soon as we break below, that, ladies and gentlemen, is your new lower low, and this is now your new lower high. Now I have a trick for you now. With this information, tell me if this market is bullish or bearish. I'll give you a second. Is this market right here, is it bullish or is it bearish? This market, is it bullish or bearish? Now, if you're a sell and forget trader, this should be very easy. But if you're not, I'll just explain why it's bullish or bearish. So you have your answer in mind. Just hold it to your mind and let's go together and read this market structure, right? So starting from here, wherever high this is and wherever low this is, there's no market structure before to tell us whether this market is bullish or bearish right now, right? So as soon as we break above, it means this market just switched bullish because this is now the highest high possible so far, right? And if you now trace it down, as soon as you see a curve, this one now the higher low. Now you wait for a break again as usual. As soon as you see a break, this market is still bullish. You just become more bullish right here, and this is now the lower high. So let's just continue this right here. Now this point right here, is this the lower low or the lower high or the higher low or your, like, you know the questions I'm asking, right? This point right here is nothing. It's just a structure point. These have not broken below, that's not broken above, it has not done anything. It's just in between. So as long as we are still in between this range, this is just a higher high, this is just a higher low. Anything in between this range are just structure points in the market, right? Now as soon as we break above again, this is now the higher high. Before then, this will now become the higher low. Now this market has been bullish all this while, and now we close below, making this the new lower low. Market have just shifted structure, and if you trace it up, as soon as you get that curve, this is now the new lower. This is now the new lower high, right? Break below, same thing. You know, break above, turn bullish, right? You wait for another break. Remember, all these points that is happening in this market are just structure points. There are no lower low until a break happens. As soon as you get this break right here, this becomes the new highest high. Now, where do we put the new lower low? Remember, where do we put the new lower low? Is it at point A, point B, or point C? I'll give you a second. Now, if you have gotten your answer in your mind, this is how you know. Remember, where's the tool? Brush, right? So if this is the new higher high, all you have to do is trace. Until you get a bend. That first sharp bend, that bend right there is now the new low, right? So this is the higher high, this is now the higher low, right? As soon as you get another break, the first break that happens, this break happened before this one, right? So you move it up, this now becomes the new lower high. Price break below, this now becomes the new lower low. I hope you are with me. This is now the new lower low. Price breaks below again, this now becomes the new lower low, and this now becomes the new lower high. Now, as you can see, there's no break, which means that this market is bearish. So if you chose bearish initially, then congratulations, you know how to read market structure. So that is how to read market structure. Now we'll go over to the charts to read it, and we are going to analyze AUD card together, right? We're going to analyze AUD card together using all these points I just made, right? Understanding market structure. Let's see. Let's go to AUD card. This is the daily time frame on AED card. If I bring out this our two trusty lines again, this is the highest high, which is the just look for the highest point in the market to start analyzing from where you can see. Start analyzing from there. If that is the highest high, where is now the higher low? Here, right? So from here to here, price was bullish. As soon as price broke below, we now look for where price stop. If you don't know where market is, remember your snake trick. As soon as you see a bend like this, that is now your new structure point, which is now your new higher low or higher high, you know. So let me delete it. All right, so as soon as we have that break, let's make it this longer. As soon as we have that break, this will now become your new lower low. Market has shifted bearish. As you can see right from here, you are already seeing all this move right here, because we already know that the market is bearish. As soon as we break below, this will now become the lowest low, right? And to look for your lower high, you need to trace, and as soon as you see a bend again, that now becomes your new higher low. I'm going to put a video of FXAlexG explaining this, just in case you don't understand it. I think I'll put it in the cards, right? If you look up or here, I don't know, look up, you will see something black right there. That is this video. Just go watch that video, you will understand better, right? So as long as price remain within this range, all this price action that is right here is still bearish. Are you with me? But let's just go deeper and analyze current market, right? Assuming we are starting from here. Assuming we want to analyze and see whether all this price action that is happening right here, whether it's bullish or bearish, right? Assuming. So let's get closer to see the market clearly. So price broke above right here, now making this market bullish, right? If this is the high, if you trace it, this is now the low. Price breaks above again, this is now the higher high right here. Then you now have to look for your lower high. You now have to look for your higher low, which is right here. If you trace it, you can see that this is where the sharp bend happened. Then you know that is your next structure point, right? Close above again. This market has been bullish in immediate time frame right here, right? And then you now have to look for your lower high. If you don't know where it is, you look for the snake trick. As soon as you see this sharp bend right here, as you can see, then you move your lines right here. Now every other price action that's happening within here is still bullish until price close in either up or down. As you can see, it closed below, making this market bearish. So we now have to move these lines all the way here. Then we now have to move this line to the new low, because you can't have this low without the new high, or you can't have a new high without a new low, right? So that is that for market structure. If you understand, you put W's in the chat, and let's proceed to the next thing. This video is going to be quite long and boring, like I said, but if you are still here, congratulations, you are understanding and learning so far. So we just covered number 2, which is understanding market structure, and remember, it's just basic higher high and higher lows and all those good stuff. Now understanding 2 time frame in sync. This is very simple, because you need to understand 2 time frame in sync in order for you to be able to draw area of interest. If you even go to draw area of interest, you need to understand what 2 time frame in sync even is, right? So to draw area of interest, you actually need these 3 time frames: weekly, daily, and 4-hour, right? To tell you a direction in the market using basic higher high and higher lows, right? In order for you to decide whether you are going to draw the area of interest. Now let me explain what that means. Now, the weekly time frame you need to analyze first or second or whatever, right? But just these 3 time frames, these 3 higher time frames, weekly, daily, and 4 hour. You need to analyze these 3 time frames using your basic higher high and higher lows to determine whether the market is bullish or bearish. Now, if you analyze weekly, and weekly tells you that the market is bullish, right? You analyze weekly, and weekly tells you the market is bullish. You analyze daily, and daily tells you that the market is bullish. Analyze 4 hour, and 4 hour also tell you that the market is bullish. This is 3 time frames in sync. Now, if you analyze weekly, and weekly tell you that the market is bullish, analyze daily, and daily also tell you that the market is bullish, and analyze 4 hour, and the 4 hour tells you that the market is bearish. This is 2 time frames in sync. Let's just keep going. I will just explain something very soon. Now, if you analyze weekly, and weekly tell you that the market is bearish, you analyze daily, and daily tell you that the market is bullish, and analyze the 4 hour, and the 4 hour tells you that the market is bullish. This is also correct. This is also 2 time frames in sync. Now, what is not 2 time frames in sync? These 2 time frames are close together, and 2 of them are going in the same direction. That is 2 time frames in sync. Now, in a case where you now have weekly bullish, daily bearish, right? Daily bearish, and you now have 4 hour bullish. This is not 2 time frames in sync. There's no 2 time frames that is close to each other that is in the same direction. So that is not 2 time frames in sync. So you need to analyze and see these 3 time frames to know if there are at least 2 time frames in sync before you proceed to draw area of interest. You cannot draw area of interest if you don't know if these 2 time frames are in sync or not. Do you understand? So that is exactly topic number 3, understanding what 2 time frames in sync is. We are done with that topic. And now, how to properly draw area of interest. Going back to our example before, remember, now that we have figured out, assuming that we have 2 time frames in sync already, assuming that we have the daily and 4 hour time frame in sync in this market, now we have to proceed to draw area of interest. Now, one thing about area of interest is that you can only draw them on 2 time frames, not on the 4 hour. You can only draw them on the 2 higher time frames, which is the daily and the weekly. That's what the strategy says. You have to draw them on the weekly or on the daily. Look for which one looks the cleanest and draw your area of interest. So far, so good, right? Now, area of interest is just support and resistance on higher time frames. Simple. Right? So now that you have done these higher high and higher lows, and you have figured out that this is your lower low, and I know that the market is bearish, and this is your lower high, your area of interest should only be between here and here. You should only look for area of interest between here and here. Anything outside here, drawing an area of interest, anything outside here, because this is also the support and resistance. Price have come here, it have rejected. Price came here, rejected. Price came around here, rejected. Drawing an area of interest there is just wrong. Why? Because if price decides to close above there, it means that this market is now bullish, because this will now be the new higher high. Do you understand? So you have to draw your area of interest within the zone of the higher high and higher low. That's why I just said that you really need to understand this higher high and higher low concept for you to be able to draw area of interest correctly. So now you just have to look for area of interest within this high and low to count that area of interest as valid. Now just look for the area of interest that has multiple touches, like this. Alright, so this is how you draw your area of interest. You just look for the point that has the most touches, that have rejected up or down and has respected it multiple times, right? So this is the valid area of interest, assuming it's more like this, right? You can see this area of interest. Price came here, was coming down, reach area of interest, rejected. Coming up, reach area of interest, rejected. Reach area of interest, rejected. Reach area of interest, rejected. If it's coming from up, reach area of interest, rejected. So you just look for a point on a daily or the weekly time frame that has multiple rejections from area of interest, or has multiple rejection before you draw your area of interest, right? So that is topic that we are just done with how to properly draw area of interest. Now, when drawing your area of interest, right, you don't draw them on the wick, you draw them on the body of the candlesticks. Now let's go to AED card, like I said. All right, coming over to AED card, as you can see, my area of interest is respecting the bodies. As you can see, is the bodies of the candlesticks I'm trying to cover, right? Now the wick can get into there is okay, right? But just note, just you see that I didn't draw the area of interest down here because it's a wick. You see, I had to draw them at the bodies of the candle. You get multiple rejection from the bodies of the candlesticks, right? Now, sorry, my voice is changing. It's because of I'm posting and recording. It's crazy. All right, let's go over to the next topic, which is major confluences to look out for when taking a trade. Now you have understood how to mark market structure, you understand what time frame is think, and now you have drawn your area of interest. Now you're not going to be doing anything on the chart until price gets to your area of interest first. Once the price gets to your area of interest, you have nothing to do in the chart. Area of interest is where you're interested in putting your money in the market just because you believe that place will have some form of reaction once price gets to certain areas. So once price gets to your area of interest, that's when you start paying attention to the market. Now, there are quite a number of things you are going to be looking out for, right? As you can see, this is a checklist. We are going to be covering it at number 7, right? But these are the things you are usually supposed to be looking out for. Looking at whether price is rejecting the area of interest. For example, if I go over to the weekly time frame on AED card, as you can see, price got to this area of interest, slowed down, and had a rejection. This is a rejection candlestick. Can you see that? Price had a rejection from area of interest. So that's one of the things you need to look out for, right? You need to look out for a couple of other things too. Is price even at the area of interest? Is it at the area of interest? Is it rejecting area of interest? Is there round psychological level at that point? I'll explain what round psychological level is. Is there rejection candlestick, which we just saw? Is it touching or respecting the EME? Remember that EME that we drew at the beginning? Yes, is it rejecting it? Is it rejecting previous structure point? I'll explain what that is. Now remember, I said I'll explain two things here, right? I'll explain what round psychological level and what previous structure point is, right? Then on the 4 hour, do we have bearish engulfing? Is it touching or rejecting EMA? Do we have any patterns? That's where that head and shoulder comes in again. Here we go, right? Now, do we have a shift of structure and entry? So let us explain what round psychological level and previous structure point is. So let me explain what previous structure point is first, just because we already have it here. Now, this is basic market structure, right? This is the uptrending market, this one right here. So if price goes up, come down, goes up, comes down, this right here is the last previous structure point of this market. It's the last structure point that where price was before price broke above it. So let me draw the lines here. This was the higher high at the time. Then this was the higher low. So this was the last previous structure point. So once price broke above it, and this now become the new high, this one is now the last previous structure point before this candle was moved. Now, there can be multiple structure points. Structure points are just where price has stalled for some time, right? But this right here is the previous structure point in this market scenario right now. So if that is the low, this is the high. So if price is coming below, is coming down like this, is it reacting from this last structure point? That is the question, right? Now let's go to Eureka. Let me show you what I'm talking about. As you can see, these are structure points in the market. are just points in the structure points in the market. Price break below it. Is it coming here to reject from this last structure point? That's the question. I don't know whether you guys are getting me. Structure points, remember, if you have a market like this, for example, it doesn't matter whether it's higher high or higher low. All these movements, up, down, all of them are structure points. Structure point don't have to be the previous higher high or higher low, but all these market stoppage, the price have changed. All those points are actually structure points. Do you understand? The previous one is just the most recent one. So if this is where current market price is, the previous structure point is this one right here, because that's the last structure point that price broke. Do you understand? So let's continue, right? So now what you'll be looking for on the daily time frame, remember we'll just cover all these things. How the major confluences to look out for is the same thing as number 7, how to rank your trade, right? But these are just the major confluences right here. Take a screenshot. These are the major confluences to look out for. Is price rejecting area of interest? Is it around psychological level? I just remember around psychological level right now, right? So around psychological levels are just respected areas in the market that big banks seems to be closing their positions. So once price gets to certain areas, price will react strongly from certain areas, right? Let's look for the round psychological level here on AUD card. Now, round psychological levels are whole numbers, and whole numbers are usually just whole numbers, to be honest, right? So if I'm looking for round psychological level here, I cannot just, if I'm a big bank, I'm not going to close at 0.9488. No, it's just too much figures. I'm just going to close at 0.89500 or 0.90000. Do you understand? 0.89500, anything two numbers, 500 or 1000, all these whole numbers, right? So if I check right here, you can see that there's area of this round psychological level here on our charts. So let me add it. You can see 89500. Round psychological level is also in our area of interest. Do you see how many confluences we are having? Price is coming up, reacting from previous structure points. Price is coming up, having a rejection candlestick. Is rejecting what? Rejecting this EMA, it's rejecting round psychological level, is rejecting from our area of interest, and is rejecting last previous structure point. Do you see how many confluences we already have already? Now, that is that for round psychological level, as you can see, right? Now this is the EMA. EMA acts as support and resistance but just the moving type, right? All right, so which other topic have we not covered? Major confluences to look out for. Okay, now placing your stop loss and your take profit targets. Now here is where we go over to the lower time frames. All we have been talking about was weekly, daily, 4-hour. Now the entry time frames are 1 hour, 30 minutes, and 15. Now Alex prefer usually the 30 minutes to enter trades. I use the 1 hour because it's more cleaner. I never ever use the 15, but it's just part of the strategy, so I'm just letting you know, right? So 30 minutes and 1 hour, very good time frames to take trades, right? So what you look for on a 1 hour, for example. Now let me just explain withdrawing. Now on the daily time frame, assuming you have a bearish move like this, right? And assuming you already have 3 taps from an area of interest, at least 3 taps. Remember, I didn't even mention it. Support and resistance on the daily time frame should have at least 3 types from area of interest, right? So you now draw your area of interest, something like this, and you have that round psychological level. You have the EME coming above. So let's just add all these things. I'm sorry, this video is getting longer. But if you are going to watch, you're going to watch, right? You have the EMA coming under like this. Example, right? From previous structure points, rejection from area of interest, all those good stuff, right? Now on the entry time frames, like 1 hour and 30 minutes, this time frame, the time frame is going to be bullish, and meanwhile you're looking for sales, right? Please pay attention to this part. It's very important. So if you go down to the lower time frames, like 1 hour, this, if you read market structure well, you see that the market is actually bullish. It will be bullish while coming into this area of interest. Do you understand? So this move right here on the bigger time frame is still the same move but on a lower time frame. But this time frame will be bullish. Now you can't still enter this trade until this time frame turn bearish. So the lower time frame will be telling you is ready before the higher time frame started going in that direction. So until this time frame turns bearish before you can now look to enter the trade. Usually what we look for is once price is still bullish, just like this, you can see this is the higher high, this is the higher low, right? Price will now shift structure and retest. On that retest, we'll be looking for engulfing candles as our confirmatory entity to take the trade short. Do you understand? That is that for entry candles. Now, how to put your stop loss, how to put your take profits. Example again, bringing these charts over here. Sorry. Now, if this is how your entry time frame is looking, for example, right? And you have that shift of structure, and you have the retest, and you have the engulfing like this, right? Now this is the price action that have happened here like this, for example, right? You now have that shift of structure and now have the engulfing, right? Now how you are going to enter the trade is obviously the short. So you enter after the engulfing, right? You have to wait for that engulfing to close for you to even be sure that it's an engulfing. It has to close. You see this, but you see this thing I just said about engulfing closing first. If you don't wait for it to close, you hit stop loss. So now you enter after the engulfing, the second candle after the engulfing, you put your stop loss above the high. This is the engulfing. This is the last high. That's where you have to put your stop loss. You cannot put your stop loss above the engulfing. You hit stop loss. Right? Then technically we target this low, which is a daily low. Right? So it don't matter how long it is, that's where we target usually. Right? But now to be on the conservative side, you can target 1:2 or 1:2.5. 1:2.5 is what the strategy says. Me, I do 1:2 and 1:2.5. But this is the ultimate structure point. This right here on a daily. So this is what happened on the lower time frame. You have this shift of structure that happened here on the lower. You enter here, and then you have to you now have to target the last structure point on the daily time frame. Right? So that's how you place your stop loss, and that's how you place your take profit. But first, place your take profit target at 1:2 first. Then if you are willing to hold, you can just monitor the charts, hold to 1:2.5. And if you are willing to hold for longer, you can keep holding, right? But if price gets 1:3 and it happens to hit your SL, then you are doing something wrong, right? So you don't have to be too greedy with this market. The market is not running away. So that's how to place your stop loss and take profits. So let's see. Now ranking your trades. Just take a screenshot of this. This is how to rank your trades. You check on the weekly or daily time frame to look for any of these confluences. You get them, you put 10%, or you put the percentage that you can see. 2 time frame in sync. If you have 2 time frame in sync, put 20%. If you have all 3 time frame in sync, put 30%. Put 10% if it's rejecting area of interest. Put 5% if it's rejected for round psychological level, and all those things. Put all those percentage. When you go to the 4-hour time frame, you put all this percentage when you see these things on that time frame. The head and shoulders pattern, if you see them, you put it there. You see head and shoulder pattern, now any time frame you can put it 10% for that time frame. Now on the entry, there's no supposed to be percentage there, but whatever. On the entry time frame is the 1 hour, 30 minutes, and 15. You have to wait for shift of structure and retest and engulfing entry signal. Now once you get all those 10%, 20%, and all those, you count it and see how many percent it gives you so that you know whether it's a plus, A, B, or C setup, right? So just take a screenshot of this one. This one is very pretty self-explanatory, right? Then let's go to the next thing. Knowing your lot size. Alright, so to know your lot size, you go over to position size calculator. It's very simple. Just search position size calculator, right? You look for the pair you are going to enter. Example, Euro USD. You put your account balance here. How much is your account? Your MT5, right? $6,000 or $1,000 or $100, right? $100. How many percent are you willing to risk? 1% or 2%? Or if you are risking with money, but I highly recommend you risk with risk. You put percentage risk instead of money, because trading is actually a percentage game, not a money game, right? So you put a percentage risk, then you calculate your stop loss. How many pips is your stop loss? Come over here. Come over here. So you come over. You carry this to measurement tool. You click from the entry to where your stop loss is supposed to be. Then you see this figure right here, 95.3. That is your stop loss. That is the amount of pips. That is the amount to put here. You put here 95 pips stop loss. Then you hit calculate. Once you calculate, it will give you how many lot you use. Jeez. Alright, let's put something relevant. To give you how many lots you use. So if you use $0.01, you'll be losing $8, which is 8% of $100. So you only be losing $8. So you already know how much you're going to lose if that trade goes against you, right? So it's very important to know that. Sorry, my voice is low. I'm really low-key tired. Remember to subscribe. Then psychology. Here we go. Psychology. Ladies and gentlemen, psychology is very important in trading. Now, of all the millions and plenty videos I've watched on YouTube, courses, everywhere, psychology is very important. They tell you that it is basically almost 90% of trading. But I'm telling you right now, all that psychology, all that almighty psychology of how to hold trades and fear of missing out or closing your charts or be disciplined, all those things all boils down to patience. In fact, psychology is patience. The market rewards patience in this market, right? Patience is all the psychology in one. If you can just be patient, you have basically encompassed everything about psychology in total, right? So everything about that psychology in trading is all boils down to patience. You don't have to be scared to lose out when you have not even gotten your entry signal. You have to wait for your entry signal to be found before you even take the trade. So fear of missing out is even out of the picture. Your stop loss and take profit targets, you are not leaving the chart until either your stop loss or take profit gets hit. You have to be patient. Doesn't matter how long it has been. I'm in a trade right now, 20 hours, price has not done anything. It's basically still at break even, but I don't have anything to do. I can't touch the trade. If I touch the trade, it means I purposely want to lose on my own. I don't know what the result is. I'm still in the game. if price is in the red, it just means you are in drawdown. It doesn't mean you have lost, right? It doesn't mean you have lost. You are still in drawdown. You have not lost yet. In fact, even if you lose that trade, you have not actually lost yet. That brings me now to the concept of 10 trades. Concept of 10 trades. Now, the concept of 10 trades means you need to know your win rate first. Now, I will not bother you about set and forget. Set and forget is around 50 to 60 to 70% win rate, depending on how the month looks like, right? But if you lose, it's not a loss yet until you have taken 10 trades and notice that you are still in the minus or you are still in the red. So if you have taken 10 trades and you have lost more, I don't know how to explain it, but you have to have this concept of 10 trades in your mind so that you don't have to be scared of losing, right? You know that you have not lost until after 10 trades, you win or lose, win or lose. If you still come out positive, it means you're still profitable. Doesn't matter whether you lose any trade, you don't have to be scared, right? So that's pretty much it for for this video, guys. Subscribe to the channel is very important, and that's pretty much it.